Hi, welcome in. Thanks for watching Everything Money with here and Paul and Seth. Mo's not with us today. He had a very important fishing trip. He couldn't make it.
By fishing trip, you mean?
I love Step Brothers. I knew you'd correct me. I had this played out in my mind. It's
Sorry.
a golf trip.
Golf trip.
But
Although he just texted me and said, would it be weird if I gave up golf?
We're talking about Tesla today. And why is that? Paul, I drive a Tesla. I love my Tesla. I'd buy another Tesla if I could. In fact, hopefully if I do have a great year, maybe I can upgrade my Tesla to a bigger Tesla because I got them damn
Instead
kids.
of saving.
That's right. But I do love my Tesla. Now, as we've talked about in this show for a long time, is we're not incredibly in love with the financials behind Tesla. And of course, the hyped stock price, which Paul pre-split, this is upwards of still like $3,500. Oh, good Lord. We were talking about this when it was
it's a lot.
$800.
Pre-split.
Pre-split, yeah. And so it's back up there. However, Paul, their earnings came out. Obviously, we should address it. I was listening to Elon yesterday with my son in the car. I heard a lot of news about how it's hard to get the chips, how it's they're having tough making the cars. They're having a tough time making the cars, yet their goals for the year are up. And it looks like they're actually making some money now, Paul. Give us your thoughts on Tesla and the company itself.
Okay, so Tesla announced earnings. They announced revenue. It was through the roof insane. Revenue surged 74%, and they made net income of $438 million. Okay, keep in mind, guys, $100 million of this was selling cryptocurrencies. They bought $1.5 billion and sold like $200 some million, and they made $100 million in profit. Guys, first off, what's a car company doing buying and selling cryptocurrency?
Believing in something amazing, I assume?
Great. Whenever somebody sends me an investment idea and I see a lot of scattered ideas, I immediately run for the hills. Focus on what you do well. Focus on what you do well. Once you master that, go on to the next thing.
Well, as we know, they don't really do producing cars that well.
Well, what did he say yesterday on the call? Exactly. What did he say yesterday on the call?
Well, I mean, there's a lot said, you know. It's funny too is my son says, is he some sort of like stutterer? He can't get his thoughts out right now. I was like, well, he's actually not speaking his native language. So
yeah, but he's been here long enough.
Yeah, he's saying a lot of things. I mean, beyond what I didn't listen as long as I should have, but you know, like I was surprised to hear not a big wave of positivity, which everyone was expecting. It seemed like there was just more trouble ahead, yet their goals, like as I said, are still fairly high. How many cars did they deliver in the first quarter? 180,000?
I don't know exactly, but here's what I'll tell you about the stock. Look at the stock price. Look at this. Guys, how is it down 2.8%? This company just crushed earnings by 74%, revenue by 74%, earnings by 74%. I'm looking at going, then why is it down? Explain that to me. This big growth company that has major growth, blah, 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 and they're down. How does that work, Seth?
I don't know how any of this works.
When you factor in so much growth into something, when it finally does happen, it's like, well, yeah, we expected that.
Mm-hmm.
By the way, there's also issues coming out. Their goal is to produce 50% more cars, which would take them to 750,000, okay?
Yeah.
So let's talk about 750,000 cars real quick. 750,000 cars. That's a goal of theirs for next year, right? This year, they made 500,000 cars. Last year, they made 500,000 cars, right? Correct?
Yeah, 500,000. That's right. Sorry, Paul.
What did they make in profit last year? Let's look at that. Last year's Tesla made $690 million in profit. 700 million, we'll call it. Okay, $700 million in profit in the entire year. Now, they're currently valued at $700 billion. On 700 million, 0.7 billion in profit. Let's do something crazy. Let's multiply this by 20. That is 14 billion in profit. So I'm not multiplying this by 1, I'm not multiplying by 2, that's 20 times. We're gonna sit there and assume, okay, they're gonna get to 20 more times profit. 14 billion. What does it make this company now sell for? So what's 700 billion divided by 14 billion? 50 PE, right? So 50 times earnings. Meanwhile, the other biggest car companies in the world, Toyota, Honda, GM, Ford, do they make $14 billion consistently? No, they don't. It happens, but they don't make it consistently. Are they selling for 50 times earnings? Because here's the point, guys. You always didn't care about earnings, PE ratio, because it's such a growing company. If it's suddenly making 14 billion, how much more is it growing? And by the way, that assumes the stock stays at $700 billion. But you're telling me it makes 20 times more. You're going to think it's only going to be a $700 billion company more. Let's say it goes to 2 trillion. Now all of a sudden, Seth, what's 2 trillion divided by 14? It's about 160 or so.
142.
142. 142 times earnings. Why do I bring this all up? That's the problem with momentum. That's the problem with paying too much for growth. When the growth finally happens, it's not even worth what you paid for them, and you expect it to go higher. But it just gets more and more ridiculous. Would you rather own Ford making $14 billion a year and paying $140 billion for it? Or would you rather own Tesla for $2 trillion making $14 billion a year? If you say Tesla, turn off the video now, you don't get it.
Ford's,
I'm fine with that.
Ford's boring, Paul. Ford's bunch of old, boring company.
I know. By the way, Ford had the first electric vehicle in 1914. Henry Ford and Thomas Edison created the first electric vehicle. But let's not talk about electric vehicles being around for over 100 years. That's my point, guys. When you're only worrying about the future and paying for the future, when the future finally does happen and the company's mature, you've overpaid through the nose and it's not going to go up as much anymore. And all of a sudden you're like, wait, I can go buy much more reasonable companies for the same price. Why wouldn't I? That's the problem with always following hype. When you don't understand the numbers behind the hype and you just look at the stock price, you'll never understand what makes that stock price. By the way, they're also issuing a ton more shares every single year. Guys, look at their shares outstanding over the last 10 years. 522 million up to 950 million. That's doubling. They've almost doubled the number of shares outstanding. Almost doubled it. That means if you owned a share 10 years ago, it buys you half the profit, half the revenue, everything they did today. If this continues, your share, you're going to get absolutely beaten up. Even if they hit every single goal you have. But I ask you to be reasonable and say, what would I pay for a car company that makes $14 billion a year, which is 20 times more than they did last year? How much more revenue do you need to do to generate 20 times more profit? Is it 20 times more revenue? Probably not. Is it 10 times more? Well, last year they did, 30 billion in revenue? 31.5 billion. They had to do 315 billion in revenue probably to make $14 billion. 315 billion in revenue. That's smaller than GM still. Now, I know I don't get it. I don't get Elon Musk. I don't get technology. I don't get any of these things. I get it. Okay, then I don't get it.
But Tesla's the best at EVs.
Awesome.
And but then I just
Amazon was the best at online deliveries, and they still went from $107 down to $6 in the crash. They survived, but how many other ones did not survive? And by the way, if they're the best at EV, would you rather buy from a company? How many companies out there are doing electric vehicles now?
I just looked that up, Paul. If you look here, it's quite surprising. Aston Martin, Bollinger, Kia, Mercedes, Mini
Why is that
Electric,
surprising?
Polestar, Porsche Taycan,
Everybody
Mustang.
does it. So who has better production, Tesla or these other big shots?
Well, Tesla makes their Model 3s in a tent in the parking lot.
I think they used to. I don't think it still happens.
Tent. I know, it was a pop-up tent. That is an argument. They were making Model 3s in a pop-up tent in a parking lot, and the Model Y came out with smashing smashing results. However, it seems like the truck is delayed. Obviously, the Roadster is delayed, and now this year they're not going to have a great time even producing Model S's or Model X's.
And I do believe Elon Musk is brilliant. But you guys are paying for that brilliance even more than I think he thinks he's worth. When the stock was at a pre-split 150, which is now $30. No, not even. Yeah, $30. Yeah, $30. He said the company was overvalued. Now, that was years ago, but still, 3 or 4 years ago, guys, come on. This is just, to me, this is a lack of understanding of how you make money in investments. Overpaying and paying $700 billion for a company that does $31 billion in revenue and generates $700 million in profit is a complete, because of the future potential, is a complete lack of understanding of how money is made. It's it. That's it. That's completely it. And if it doesn't speak to you, I get that. Say whatever you want to me in the comments. Paul, you're an idiot. You're more. You don't get it. I don't get it. That's the point. I admit I don't get it. I've been wrong so far, right? Because the stock price keeps going up and up and up.
Yeah.
I just don't get it. What are you going to blame if the stock price goes down 90%? Literally, it's up 10 times in the last year. 10 times last year. Has the company gotten 10 times better in the last year, Seth?
It can't go down 90%, Paul. That's not possible.
I know. It's never happened before in history. Amazon went from 107 to 6.
Mm-hmm.
How many companies went to 0? It's never happened. Come on. It'll never happen. Okay. Listen, I know I look stupid.
Instead, where can you put your money?
ETFs. And follow any of the companies that we talk about in the other videos that have good financial fundamentals included with a reasonable...
Boring.
Exactly. It's boring. Guys, good investing is about discipline and being okay doing what everybody else isn't doing. And that means being boring. But I ask you a question. What's more boring? Being filthy rich or losing 90% of your money because you went and chased things? I like being filthy rich. Warren Buffett likes it too. Charlie Munger buys it too. Don't fall for the people who say they're Warren Buffett because they quote Warren Buffett. Look at their actions. I quote Warren Buffett all the time and my actions. And if you join our Patreon, you get to see my portfolio and you'll be like, what a boring portfolio.
Mm-hmm.
How boring is this guy? Love being boring. Boring is what makes me happy. I love sitting on my couch at night, watching stupid television shows. Not stupid. I'm watching Homeland right now.
And not reacting to quarterly financials, which cause stock prices to go down.
Can't
and
stand
wondering,
it.
Yeah, there's no reason. I mean, you know where you're headed.
Yeah, I don't care.
It's almost guaranteed for you.
Yeah, I know where I'm headed just based on numbers.
Yeah. How funny. What an odd,
all right,
what
so
an odd
Tesla.
Concept.
Yeah.
What an odd
Listen,
concept.
It's so funny to me. Everybody, if you lived your life the way these companies operated, you'd be bankrupt. I mean, that's exactly how it is. If you operate your life the way the government operates or the way some of these companies operate, you'd be bankrupt.
Yeah.
And everybody always says cash is king, yet we don't buy the companies with the most cash and the most cash flow. That's the funny part. And pay reasonable amounts of money for that.
Yeah, that would be silly.
Oh, why would it? Yeah, of course, it's silly.
Yeah.
Gibberish. Why would you buy a company that makes $10 billion in cash flow? I'd rather buy a company that loses $10 billion in cash flow because they have so much more potential. Let's go pay $100 billion for it. Okay, that makes no sense. This is where I stand, people. It's not a secret. Go watch the other videos. Join our Patreon.
There's a lot of people who love that Patreon, bro.
Yeah, it grows 15, 20 people a day. It's incredible.
Those trades they're making in the bid and ask.
Not only that, though, the number of emails we've gotten from people saying you've changed my life is actually kind of like, is it like mind-boggling for you?
Yeah, so if you're catching this video, if you've made it this far, congratulations. And if you're catching us after you've lost a ton of money following other YouTubers, we welcome you in to our slow, tortoise-like path to wealth. And follow Uncle Paul and his gajillion dollars. And yeah, you'll feel better about it. I trust me. That's the way I'm feeling. Of course, my whole family, Paul's just loving all this. So that's our show. Family. Tickle a thumbs up. Fondle that thumbs up on the way out. Check out the Patreon. It's incredible. Of course, love you guys. See you.